Enhanced due diligence for high-risk customers. When it comes to compliance procedures and controls in anti-money laundering, AML, it is crucial to pay special attention to high-risk customers. High-risk customers are individuals or entities that have a higher likelihood of being involved in money laundering, terrorism, financing, or other illicit activities. Enhanced due diligence, EDD, is a process that banks and other financial institutions undertake to mitigate the risks associated with these customers. We will delve into the various aspects of EDD for high-risk customers. The importance of customer due diligence lies in its status as a fundamental requirement in anti-money laundering, AML, compliance. This critical process underscores the necessity of thoroughly understanding your customers and their financial activities, which serves as a cornerstone in mitigating the risks associated with money laundering and terrorist financing. Based on customer due diligence measures, financial institutions can more effectively identify and assess the risks posed by their customers, ensuring that any suspicious activities are promptly detected and addressed, thereby maintaining the integrity of the financial system. Identifying the customer involves a detailed process of accurately recognizing individual customers or legal entities. This crucial step necessitates the verification of their identity using reliable and independent sources to ensure authenticity. Commonly utilized identification documents for customer verification include passports, national IDs, and utility bills, among others. Moving on to understanding the nature and purpose of the business relationship, it's essential to grasp the customer's intended purpose behind initiating a business relationship. This understanding helps assess whether the customer's activities align with their stated purpose and typical behavioral patterns. In terms of assessing the risk, the process entails evaluating the risk level associated with a particular customer. This evaluation takes into account various factors such as the customer's country of origin, the nature of their business, their transaction patterns, and overall reputation. A risk-based approach is pivotal here, ensuring that higher-risk customers are subject to additional scrutiny and enhanced due diligence measures. Ongoing monitoring highlights the significance of continuously observing customer transactions and activities to pinpoint any anomalies or suspicious behavior. Businesses must implement effective systems and controls to detect and investigate such transactions, fulfilling the obligation to report any suspicious activities to the relevant authorities through Suspicious Activity Reports, SARs. Understanding the concept of enhanced due diligence. Enhanced due diligence is an advanced level of scrutiny that goes beyond the standard due diligence process. It involves conducting more extensive investigations and gathering additional information to gain a deeper insight into the customer's background, business activities, and potential risk factors. The purpose of EDD is to identify, assess, and manage the specific risks associated with high-risk customers. Identifying high-risk customers. Before implementing EDD measures, it is essential to identify which customers fall under the high-risk category. The identification process can be based on various factors, such as the customer's location, nature of business, occupation, source of funds, or complex ownership structures. Financial institutions often use risk assessment techniques and screening tools to determine the level of risk associated with each customer. Collecting additional information. Once a high-risk customer is identified, the next step is to collect additional information that will facilitate better risk assessment. The information collected may include source of wealth. Understanding the legitimate sources of the customer's wealth helps differentiate between legitimate and illicit funds. Ultimate beneficial ownership. Identifying the individuals who ultimately own or control the customer's business provides insights into potential risks and vulnerabilities. Politically exposed persons, PEPs. Identifying whether the customer is a PEP enables a more comprehensive assessment of potential corruption-related risks. Enhanced monitoring and ongoing review. High-risk customers require enhanced monitoring and continuous review to detect and prevent any suspicious activities. Financial institutions should establish specific monitoring mechanisms to track the customer's transactions, flagging any unusual or suspicious patterns. Ongoing reviews help ensure that the customer's risk profile remains up to date, and the EDD measures remain proportionate to the identified risks. Risk-based approach. ED should be implemented based on a risk-based approach, taking into account the customer's level of risk and the likelihood of exposure to illicit activities. The severity of the risk determines the level and extent of the EDD measures. Applying a risk-based approach allows institutions to allocate their resources effectively and focus on the areas where the risks are highest. Documentation and record-keeping. Throughout the EDD process, financial institutions must maintain comprehensive and accurate documentation to demonstrate their adherence to the AML compliance requirements. This includes keeping records of all ED measures taken, the information collected, and the rationale behind decisions made. Proper documentation is essential for audit purposes and regulatory reviews. Training and awareness. To implement EDD effectively, it is crucial to provide sufficient training to personnel involved in conducting the enhanced due diligence process. The training should cover the identification of high-risk customers, data collection techniques, risk assessment, and the effective use of ED tools and technologies. Continuous training and awareness programs ensure that the staff remains updated and competent in performing their EDD responsibilities. In conclusion, enhanced due diligence for high-risk customers is a critical aspect of AML compliance procedures and controls. It enables financial institutions to mitigate the inherent risks associated with certain customers, ultimately protecting themselves and the integrity of the financial system. Based on appropriate EDD measures and following a risk-based approach, institutions can enhance their ability to detect and prevent money laundering and terrorism financing activities effectively.